All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen. Right, I wanted to do a quick little video on what's happening in the Forex world because we are so focused on equities, we're so focused on precious metals, commodities in general, that we're kind of pushing away the Forex sector. And actually, there are some interesting things, interesting developments happening there. So I thought I'm going to run through a few popular Forex pairs just to see what's happening, and we'll go from there. Look, before we go any further, as always, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. So yeah, today, Monday, we kind of started the day with some interesting developments in the world surrounding geopolitics, surrounding Federal Reserve. I mean, everything is really crazy. I think we're going through a very crazy period. I thought that 2025 is going to be like messed up, but I think 2026 is no better. Anyway, also quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Ladies and gentlemen, look, first of all, I want to pick up on DXY, the US dollar index, and we are seeing a nice move to the downside, kind of cutting off this 4-day rally, or finishing this 4-day rally. Look, I talked about it in my Markets Talk webinars. You can always join those live, or if you can't, you can watch them as a recorded session. They're available on our YouTube channel, so you can check us out here. Don't forget to subscribe. Hey, the usual thing that YouTubers ask, right? But yeah, we do have more information here that I throw out. And look, DXY, I was talking about this when I said that, look, we were trading around here first, around that was last week, near the 98.76 zone-ish. I mean, that's the high of the 11th of December. But in general, I mean, this whole area is more of a, this one, 98.76, is just basically capturing a lot of good support and resistance. And it was initially a good barrier. I said that if we do break through it, my next target is the 99.28, 29 zone-ish. There we go. Picture perfect test here, and now we're reversing back down. So all the stars are aligning perfectly, but one thing for sure is that this DXY drop is coming on the news that that there's a subpoena issued against the Federal Reserve, or Jerome Powell, to be more precise. And we're seeing some weakness in the dollar, and maybe this is all to do with the fact that again, maybe with the fact that the White House administration really wants those cuts, and the Federal Reserve is really not giving them that, and they cannot really push that in any other way, and probably by throwing out a subpoena against the Jerome Powell is something that they can, how they can manipulate and force him to go and cut rates. Now, look, in terms of rate cuts, we know that in January we are not going to get one. That's for sure. That was as expected, and by the end of April, this is going to be the last Jerome Powell's kind of meeting. At the moment, we're also not expecting to see a rate cut, and but again, this is normally you would say that this is a positive thing for DXY, because again, we're not going to see the rates dropping further. However, I think it's just the result is such a negative one that they're really afraid that maybe he's going to get kicked out earlier, and you will get a new Federal Reserve chair, a little bit earlier, and surprise, surprise, he's going to be more in favor of of cuts, and we might get those cuts a little bit earlier, before April. So that's, like I said, that's the interesting world we live in right now. Of course, the word interesting is the very light word version of what's spinning in my head. But certainly, right now we're seeing this weakness in US dollar. We saw this morning already a big sell-off in the US futures in index futures, and yeah, everything is basically in that mode of sell the USA. Only the bonds are kind of rallying a little bit. By the way, let me just have a quick look. Where are those? Where are my treasuries? There we go. The 2 year. You see that the 2 year has pushed nicely to the upside. 10 years so, but the 10 year is also kind of slightly gaining, but the yield here, the 2 year yield, the 1 year yield are pushing back up. It seems like this is something that is helping the the bond market the bond market yields to push a little bit higher. Anyway, certainly, like I said, coming back to the DXY scenario, the DXY story, yes, we've drifted lower. Is this a moment to worry? I would say, look, at the moment, it's just maybe considered as a little bit of a hiccup or something like that. Should everybody start panicking here? No, not yet, because well, there's more to all this story. We'll see if it's actually going to escalate, because again, the problem here is that in a way, by such actions, you're kind of damaging the Fed's independence. Like, yes, on one hand, you're trying to accuse them that for spending money on this building that they're renovating this historic building, and it's a little bit going a little bit overboard now financially. But then the question is, like, is somebody looking into the White House ballroom renovations and total, actually not even a renovation, total demolition, and a newly built one which needs to be a little bit bigger? So again, hypocrisy a little bit here. So long story short, for now, watching this US dollar situation here, look, okay, it's drifting lower, that's fine. But the question is, can it go further south? And at the moment, it's resting nicely on this 98.76 territory. Look, if it drops and stays below it, I think there could be more downside, because in a way, it's going to be placed below all my EMAs here on the daily chart, and the 50, the 100, and the 200. Yeah, we could see further declines. Currently, overall, it is in a range. The DXY is still within a big wide range, roughly between the 96.2 and the 100.5 levels. Ish, again, like I said, approximately around there. But looking at the even bigger picture, if we apply technical analysis on this right now on DXY, looking at this picture, then we see that there's a range, right? The prevailing trend before entering that range was to the downside. Hence, the greater chance for this one to break out to is in a way to the downside. Again, I said it before and I'll say it again. At the moment, I think that the US dollar is going to find difficulties to find kind of some upside momentum. I think that at the moment nobody needs, especially the White House administration, doesn't need to see a strong dollar, because everybody, the whole idea of making everything at home, building those factories, so that it would be your U.S. exports would be more attractive to the world. So you need to kind of devaluate your U.S. dollar, and and then we'll deal with the rest later. For now, like I said, it seems like the path for the U.S. dollar is still. My personal view is that it's still to the downside. Again, there's a lot of ifs. Anything can change. Unfortunately, I don't have a crystal ball, but certainly the way everything's behaving, and if we analyze the information that we have right now, then yes, it seems like the greater chance for this one is to drift lower, further down. If I look at the monthly chart here, we're not far from the 200-day EMA on the monthly chart, and judging from this, like I said, this picture, it does look like a somewhat of a bearish flag here on the monthly chart. And let's see if we can drop lower, and if we do drop lower, And if we do make a break through that 96.2 zone, well, I think, in my opinion, that the next path here could be towards the levels kind of closer to the 90 zone, the psychological 90. Yes, we will have to deal with little obstacles here on the way lower. For example, this one, the 94.74 zone, or maybe let's say this inside swing high here of this the highest point of March, the highest point of March here of 2021, near the 93.44 ish approximately. But again, still a long path there. I think that the US dollar could still fluctuate here a little bit, but first, from the very short term perspective, I'm watching this 98.76. If it falls below this, then yep, further declines here could be possible. And this is where I'm leaning a little bit towards inflation, which is coming out tomorrow. The inflation numbers, which are coming out tomorrow from the U.S., and that's basically here. Look at this. Headline year on year is expected to come out the same as 2.7. I have the chart here, but what I was talking about in this morning in Markets Talk webinar, that I believe that there could still be some downside. And in a way, if the inflation comes out a little bit on the lower side, this is a good opportunity to pour more anger on Jerome Powell, saying, oh, look, inflation is dropping and falling. Why are you still not going for those rate cuts? So that's kind of the thing here. And I think at the moment, we need to consider the fact that a lot of things are politically motivated, and everything can be really kind of manipulated in a way. So we be careful. On one side, you can look at the data numbers. We base our judgment on the data that we get. However, we have to take everything with a pinch of salt, kind of understanding that, look, BLS, the Bureau of Labor and Statistics, had some issues at the end of last year because of the U.S. government shutdown, and well, it kind of skewed everything. And basically, more time has to pass until personally, I could trust the BLS data, because again, it's something is skewed, and then we know that there are some reports that the way the data is collected is a little bit shady. So yeah, so that's why I'm being very careful, very cautious right now, and I do accept the fact that if inflation comes out on the lower side a little bit, fractionally, but yeah, I think that could just pour more hot water, basically boiling water, on the US dollar here, and we could see this one drifting back down. But again, look, if it suddenly reverses and pushes above the 99.28, I will aim for the upper side of this range. Now let's jump into Forex very quickly, ladies and gentlemen. I think I've already talked a little bit too much, but now let's have a quick look what's happening here on the AUDUSD side. Yes, we're seeing a sharp reversal to the upside today. Look, at the moment, I'll say it this way. I was looking at this from the perspective of a rising wedge pattern, which tends to break to the downside, and we got the breakout on Friday, but today, yes, it's reversing back up. So in a way, I have to say that this is no longer a rising wedge. If it wants to go lower, if it will go lower again, then okay, fair enough. But given the fact that maybe I'm considering a little bit of a lower number on these CPIs, then maybe this could actually bounce back up here. But look, long story short, I think I'm not going to put any trend lines for now, because this is not the chart. What I'm going to do right now is just going to stick to some resistance and support levels. At the moment, if I'm looking for some downside, 0.6660 is the area that I'm watching, and I want to see a drop below that in order to consider some lower levels for the upside. I will take a bit of a conservative approach, and I'll wait for a push above the current highest point of January, near the 0.66 or 0.6766 area, and then we'll go from there. A quick glance at other pairs with the US dollar in them. EURUSD, there we go, rebounding, of course, logical after such a prolonged decline. A little bit of a breather here, but again, for me to consider some higher levels on this one, a push above the 1.1810 is needed. So Look, I know that I'm missing out on a lot of territory. Some of you might say, but hey, Darius, what about this little downside line? Look, from the very short term perspective, yes, you can keep an eye on it. It's not like it's not a crime. Just be careful. Like I said, maybe we'll struggle to push higher here, but we can start looking at some higher levels on a break above this little downside line taken from the high of the 24th of December. If we can get a clearance of that, great, more buyers could join in. For the downside, a drop below this 1.1618 zone could attract a few more sellers here into the game. So yes, if we can drop below this hurdle, I'm going to lean towards this. Actually, towards this upside line, which is drawn from the low of the lowest point of August of last year. A quick glance at GBP USD. Where is it? Where is it? There we go. Also, beautiful rebound from this key area of support near the 1.34 zone. So basically, the 1.34 becomes a strong area of support, which, if it gets broken, could attract more sellers into the game. But look, when I'm saying that could attract more sellers into the game, I'm not saying that like suddenly from here it's going to just collapse and fall off the cliff. No, it will. I will then aim for my next potential target, which will be somewhere in between the 1.3288 and 1.3312, something like that. Basically, around here, I have my 200-day EMA here on the daily chart, which is shown as a white line. Has been a good area of support previously, also as a resistance, so why not to aim for that one just for now. Let's have a quick look at the USDJPY. Now, this one I shared recently with our VIP clients, basically, and yes, I said, look, we are in a range here, obviously, right? But we're kind of testing lately the upper bound here. We're not really pushing further away from it. We're kind of flirting with it. We're oscillating around that upper bound of this range. So in a way, we violated it, but it's still lacking energy, it seems like that, to push further north. Now, the problem here is that we currently have a battle of the weaker ones, and the United States dollar is on the weaker side, and the Japanese yen is on the weaker side. Although we saw the futures, falling off the cliff today a little bit, but the Japanese yen didn't really gain. It's normally seen as a safe haven, but it didn't really normally gain. But why? Because again, they have some domestic issues in there. We know that Sanai Takaichi, the new prime minister that came at the end of 2025, she's more in favor of spending. This is what they're doing right now. We know that the BOJ at the end of this month, or actually next week, they're not really going to do a hike as they did last time. So they're gradually doing those hikes, and I think that this is what they were asked to do as well. Although everybody has to be independent, right? I think that they need politically, for Sanai Takaichi, that would be great if she can have like a lower rate for spending, because she has to deliver on everything what she or at least part of what she promised. So that's where the cheaper borrowing has to come in. Anyway, and of course, it politically wouldn't look good if suddenly, your mortgages are increasing, and she just came into power, and like suddenly, boom, for regular people who are not like into economics, for them they're just not going to understand that. It's just going to be a bad image on the politics. So yeah, there we go. For now, we're having problems. Japanese yen is having problems right now gaining strength. But on the other hand, you're able to boost your exports. Your exports are a little bit more attractive to the global arena. So and especially the U.S., because again, U.S. is trying to become that attractive side, but Japanese products right now are on a little bit more attractive, I would say. A very quick glance at USDCAD. So here the situation is that we have the Canadian dollar strengthening a little bit because, look, there is oil, which is somewhat a little bit on the stronger side lately, and yep, Canadian dollar is basically strengthening on that. Also, a little bit of weakness of the US dollar kicked in here, so all the combo kind of worked out nicely. So we're seeing a little bit of a retracement here after a very, very strong rally that we saw here from around 1.36.5 to all the way to 39. Look, a little bit of retracement I think is possible if I do apply my beloved Fibonacci on this little move here. Then we'll see that there is some room until the 23.6, 1.3854 zone-ish. Could be a nice good target. So yes, if that gets cleared, I mean, the 38.2 is the next good target as well. So I think it's quite doable. Let's see what if that's going to be the case. So yeah, ladies and gentlemen, just a quick glance on the Japanese yen pairs like the Euro JPY. Just I wanted to show you what's happening there. Although USD JPY is not moving higher, this one is. You can see clearly that the euro is very strong, or should I say, the Japanese yen is very weak right now against the euro. It's pushing higher, and we are approaching the highest point of 2025 again. Let me just show you what I'm talking about here. So this is the highest point of 2025. Let's see if we can clear that. If we can, look, there is a good path towards higher levels. The next target for me is the 188.22 overall. That's the basically the highest point of 1990, ladies and gentlemen. That's where we are right now, and we are approaching that area. So keep your eyes on that. For on the Euro JPY picture here, it's very interesting. Like I said, we just need to clear the highest point of 2025, and then I think if we will be getting closer to the level of 1990, the peak, the highest point of 1990, I think this is where the Bank of Japan might start sounding the alarm again, and well, maybe a little bit of intervention could happen. A similar story, like I said, with the GBP JPY. This one's also off the charts in a way, rallying nicely. There we go, beautiful push here through the upper side of this rising channel, and there we go. At the moment, I think yeah, further upside is still possible. I'm watching these levels which were back in 2008 here. You see that, for example, back in 2007 we rallied fantastically here. Then we sold off. So I think more upside here is possible. I think this 213.15 levels, those are quite attractive. Let's see if we can reach those. Ladies and gentlemen, let me know in the comments if this was useful or not. Thank you very much for watching and listening. I really hope that you found it useful. Like I said, just wanted to share with you my little thoughts on the FX world. And yeah, ladies and gentlemen, do not forget to like and subscribe. And please let me know what you think, and we'll go from there. Ladies and gentlemen, thank you very much for watching and listening. I really appreciate your time, your views, your likes, your comments. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. And I'll see you next time. Bye for now.